Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, October 11th, 2014. This is the weekend edition, so we're going to take a look at our 5 indices on daily and weekly basis. We're going to take a look at the DAX, the German DAX also, because it looks like it is topped out. We'll look at our indicators, some key ETFs, and then the 5 stocks we're going to look at today, or 4 stocks, I'm sorry, are EXPE, Green Mountain Coffee Roasters, LULU, and Whole Foods Market. Okay, so the Dow was down 115 points on Friday. So we're continuing the move to the downside. I have no reason to change the wave count I've got in here. We continue to work a 1, 2, 1, 2, 1, 2, and the reason is we just don't seem to show a completed third wave, and you have to label these as second waves because they keep overlapping to the downside. And the moves, the one moves are all 5 wave moves when you look at them on on an intraday basis. Okay, so that's why I'm labeling that way. Now, the interesting thing, let me get rid of this. The interesting thing about Friday is you look at it and say, well, wow, we didn't have a big downdraft like here and here and here and here. Well, no, we worked a sideways move, and actually on an intraday basis, we actually worked sideways in a flat, an Elliott wave flat, and kind of an ABC flat between, let me look at my note, 1:30 Central Time on Thursday to 11:30 Central Time on Friday. I'd been waiting for it on Friday to just break open to the downside, and it finally started to do that at 11:30 Central Time on Friday, and then that's when we got this move to the downside. Okay. Now, only 115 points. Let's go ahead and look at the rest of it. And again, the other point I wanted to make here, this is a solid breakout of this diagonal now. Let me shrink it back out. So again, this is this ending diagonal 5th wave that we have here. And we have now getting this solid breakout. Now, the thing to remember about diagonal wedge type formations like this is that when you break out of these, you typically will move fairly quickly to the bottom of the wedge. Okay, so that's going to be either the bottom really is theoretically down here, and then what is that, an October low? So you just don't know. I mean, the thing to remember about stocks is it takes buying power to push stocks up, but they can fall under their own weight. Okay, that's an old Wall Street axiom. Stocks can fall under their own weight. So, you just never know how fast they can move to the downside. All right, so let's take a look at S&P 500. Similar type move. And all these indices closed right near their low for the day. And it is, right here, the low was 1904.78. Closed in 1906, low 1906.05. So we're right in here at support, very close to the August low. And here's the 233-day simple moving average I've got in here. I'm trying to see if there's anything else. Let me look at my notes. Again, a solid breakout of this trend line. Minimum double. Oh, I'm looking at let me go to the New York real quick. This is the one I want to point out. This is the one where we got the solid break of this trend line, this major uptrend line. We talked about it once, before. I think Wednesday night I probably did. And then now it's just reinforcing it. This double top also looks like it's in. We're getting a little bit of divergence in here, but we also thought that we were getting it on the 7th, which was Tuesday. And yet, you got a little bounce, but yet came right back down and sold off. So we'll have to be careful about, it looks like we're getting divergence, but price is telling us to continue to push to the downside. Again, the double top that looks like it's in, excuse me, is this move is projected right in here is the move for the double top. Okay, at a minimum, and that would put it back down at what, lows? No, here's the February low, so that's not as low as the February low. So anyway, the NASDAQ continues to push down. I mean, we're all the way, almost to the 233-day moving average. It was down, I think, the biggest percentage loser on Friday, down 102 points. That's a pretty good whack on the NASDAQ, and well below the August 4th lows. So, when you see that the NASDAQ's below the August 4 lows, the New York Composite is well below the August 4 lows, the S&P is almost there, and the Dow is not quite. The Dow's got some catch up to do. So it'll be interesting to see. I'll look at this on a weekly basis here in a minute. The German DAX on a daily basis looks like it's broken below this top. This looks like a big head and shoulders top, and it's even clearer on a weekly basis, and we'll look at that in a minute. So on a weekly basis, here's how the Dow looks. Again, this is this ending diagonal wedge, and clearly you can see the breakdown out of it. And the S&P 500 weekly, again, right at that support, at that 1904.78 level, right at that support. I just don't see that holding, but you never know. I just don't see it holding, though. Let me look at, let's see, the New York Composite on a weekly basis. Here we go. Now it's even more dramatic in terms of, let me blow it up a little bit. The breakout of the double top that you see here, and how far down, where it's trading. I mean, it's right here at the April lows. So I think I calculated that, for the S&P 500 to catch up to where the New York Composite is, it'd be another 90 points down. And for the Dow to catch up to where the New York Composite is, another 500 points down. So clearly the New York Composite, a very broad indice, of all the stocks, common stocks on the New York Stock Exchange, is showing much more damage than even the S&P 500 or the Dow Industrials at this point. The Russell 2000, and there it is. This thing always seems to know where I want to go, which I don't know how it does that, but it has broken below this top up in here. Again, this clear support that we talked about for weeks and days at 1082, and it is, well down below it. And where is this, closing at 1053? It hasn't been at 1053 on a weekly close since, it looks like September of 2013. So over a year. Yeah, so it's definitely got, it's put in a lot of damage too. A lot of carnage going on in some of these stocks. Let's go ahead and take a look at the short-term trading index. Okay, the short-term trading index is right smack in neutral still. Okay, so it's been bouncing around. It's interesting how we did get this low where we get the 0.84, the blue line, below the 0.9 red line. Okay, and that happened right on the high of the stock market. The Dow Industrials, everything was on the high there on the 16th, September 16th. So it didn't give you much warning at that extreme reading. The VIX, CBOT Volatility Index. This has really pushed high and continued to push last 2 days. Okay, remember I talked on Wednesday night, and I said even though we got this big reversal bar, this whole trend looks like it was continuing to still push higher, and sure enough, it has. It's pushed up and through here. The reason I'm showing these indicators is because I'm not seeing any negative divergence. Okay, notice how in August, the August top, you had some negative divergence came in on the DI plus. You didn't get it on the RSI, but you got it on the DI plus, and then next thing you know, it kind of petered out and rolled back down. And let's see, there's another. Oh yeah, and back here in January. So you say, okay, what about the January, February, bottom in here? Well, we got divergence on the RSI very clearly on this big push up at the bottom of February 3rd. We're not getting it right now. Okay, so that leads me to believe that we haven't put in a bottom yet. Okay, based on looking at the VIX. And so let's back this on out, and you can see also, remember I drew this trend line in here, and it almost looks like a big head and shoulders type move on the VIX. head and shoulders bottom, reverse head and shoulders. And where it's gone to is the extreme readings that we got back up in here. And I'm looking at my notes. Highest intraday reading since December 2012. And back in December 2012 was when all of that, I think that's when we were talking about the fiscal cliff, and I don't know, it's all a distant memory now. But anyway, we're getting that extreme push on the VIX. High low, this is really interesting. Okay, so the Dow was down 115 points. And again, the high-low index that I'm measuring off, this is on the New York Stock Exchange. So this isn't the NASDAQ. So even though the NASDAQ was down over 2% on Friday, the Dow wasn't. Now, the New York Composite was down pretty good. But look at this new plunge to further lows. So minus 428. So 428 more new lows, 52-week new lows on the stock market than new highs. And pretty good extreme. We're getting down, let me back this off. This is comparable to where we were in the August and June type lows. I've got this minus 500 line in here, and I've got it as a guideline. And I put it up here up on the top too for the 500, because it seems like whenever you get beyond that, you're at an extreme, or if you're close to that. So I'm a little bit watching this thing now that we've gotten this extreme reading down in here. We could be getting close to, possibly bouncing. We'll have to look and see. The other thing I want to, and so if you scan back, look at the August, September into October 2011 extremes that we got. So we got it down minus 800, minus 750, and all the way down to over minus 1150. So you can get some pretty extreme readings on sell-off days. But the other thing I'm going to be watching for is, notice how, let me blow it up just a little bit, these W bottoms, okay? Let me see if I can highlight this. This little area in here, it looks like a little, W bottom, okay? And the same thing here. And so I'm going to be watching to see if we get the same kind of formation or trading activity on this. Now, if all of a sudden we get an extreme bounce back and we close back above this point in here, that would be kind of an extreme W, but it would be kind of a W bottom. But I'd like to have a better one than that. So we'll have to watch and see if we get something like that. And the interesting thing when I looked at this, it's like, okay, well, when did this W bottom kind of complete itself? Let me kind of look at this right here on June 25th. So if we look back and say, well, June 25th in the Dow Industrials, what was happening? And we're talking about June 25th on the Dow. Okay, so right here. Okay, so that's where the W completed itself, and that was pretty much had just put in the bottom, and it was bouncing up, and then so in August, when I looked at this on this other one over in here, the date was August 20th, and I think it was a little bit early. And August 20th was right in here. So we still had a little bit to the downside. So again, this is not an exact science. It kind of gives you maybe an indication that maybe you're getting closer to the bottom. So you still have to watch and see. I still watch to see, especially on the indices, does it start to close back above the 10-day exponential moving average. Okay. So that's the high-low. The next thing we want to take a look at is let's look at some of the key ETFs we got. SMH, boy, did that crack on Friday. Like market vectors, semiconductors. Look at that. So, we didn't really get a lot of indication here near the top. Well, I guess we did. Yeah, sorry about that. We were getting a divergence on the RSI and a little bit here on the DI+. So yeah, we were starting to get some divergence in here. I think the thing about this was this never was leading us down in terms of leading the market down. So it pretty much was right in sync with the market. And actually, I mean, look at this higher day on the 18th after the pretty much the Dow and the S&P 500 was on the 16th. And then it didn't take long for this to roll over then, and look at this crack and breakdown. Pretty severe drop all the way down here to the 233-day moving average. It looks like it's getting some support in the middle of this congestion. Okay, if you were to draw a line right through the middle of that congestion and bring it on over, you're pretty close to where the intraday was on this on Friday. The next thing is XHB, the housing. Home builders, there we go. Now the home builders, it looks like we're getting a little bit of bullish divergence coming in. Okay, let me blow it up for you. And we had this move on Friday down, and hasn't, the indicators haven't confirmed that yet. The other thing I noticed is it is breaking out of this channel somewhat, and especially on a close. So we'll have to watch. Do we continue to get more damage? It looks like it could be getting in an area where it might get support from previous trading, back over here, August, September last year. We'll see whether or not that holds or not. But right now it's pretty good little downtrend. And the next one is XLF. XLF is not acting as quite as bad as the semiconductors in terms of a break, substantial break, but it's still doing a pretty good little sell-off. And it has closed for the first time below this trend line, connecting the lows from January, February, and August. So the February 3rd and the August lows, that trend line connecting those bottoms, it just broke on Friday with the financials. So that's negative. And the last one we want to take a look at is the high yield bond fund, which I saw it in here. Here we go. And again, this is confirming the breakdown, with the market. This is continuing to go lower. The one thing I thought was interesting about this is right at the trend line of basically trend line for this entire top of about 2.5 years. And so here we are from 2007 through here, and you can see the trend lines that have broken. And now this trend line in here, this top that we're looking to put in, and if it breaks down further, I would say that's a confirmation that the top is pretty much in on this high yield bond fund, which, that's kind of, it starts to signal, where's the stock market going, because this is the, people are fleeing from this, moving away from high risk. Type of thing is an indication. All right, let's move on. Those are the indices. Let's move through the 4 stocks we're going to cover. We're going to look at EXPE as the first stock. So that's it for the market today. And the first stock we're going to look at here we go, Expedia. I haven't looked at this in a while. I'm not sure that I've actually covered this before at all on any of the videos. So I'll probably do a separate video to look at it on a weekly basis and everything. What I just want to point out is this trend line from October of last year has now broken. And, it's kind of interesting. I don't know if there's a connection in here or not. I wouldn't be surprised with the whole Ebola concern and breakdown and travel and Ebola scanning at airports and some of the stuff I've been reading about. I read some stuff this morning. It was just amazing, of different incidences going on where airliners are pulling over, and it could start to affect the travel business. And Expedia looks like it's breaking down, looks like it's broken this support in here. I don't know, 233 is all the way down here. It may get some support as it hits, previous areas where support came in. It may just kind of stair step down. That's my best reading on Expedia at the moment, and I'll spend more time on it on an individual video, just a single video by itself. Green Mountain Coffee Roasters. Where are you? And I'm probably looking for there's Whole Foods. Oh, here we go. Keurig Green Mountain is what they call themselves now. So this is in what looks to me like a 5th wave ending diagonal also. So, kind of like in the market, but it hasn't broken down yet. And when I look at this, it does look like there's divergence coming in. Let me back this down on the RSI, on the DI plus, on the demand index. And so, we're getting divergence between this point and this point. So this last little move up. So I'm watching to see, does it start to break down? Does it get down below the 10? Does it roll over and start to break this trend line? And if it does, then it probably will head south fairly quickly. It sure has been fighting the trend. I mean, look what's been going on. Even though the market's been, been going in the tank, this is pushed higher. So I got a feeling, based on what I'm seeing here, that its time is about to come. And the next one is Lululemon. And Lulu is breaking down again. It took this big pop to the upside. It's rolled back over. The moving average is crossed in here. I was really tempted to buy puts right here at this close above it, but it kind of spooked me with this upward trending 21-day. Well, and the last 2 days it just rolled on over, and now it's broken below this trend line right here. So short term, it looks like it's getting ready to head back down. Whole Foods is the last one we're going to look at today. Here we go. And Whole Foods is still down in the cellar. I mean, it's down here. It's in this box that I call it, just because this was the end of a very big move to the downside, and it has just done nothing but trend sideways in here. Now, short-term wise, most of the action has been below the 10. The 10's below the 21. Now both of those are below the 55. It does look like it's trending down. It'll be interesting to see, does it break, this prior low or not, or does it stay in this quandary that it's been in for the last few months? Actually, I mean, look where it stopped on its initial downward move back all the way back here in May. It's pretty much been in this area. This range hasn't gone lower, but this was a high bounce here, but this is the box I'm talking about. So hasn't done much, and we'll continue to watch and monitor it, see if something of interest developed. But right now, I don't see anything that I want to take a position on. All right, that's it for today. Long video, 22 minutes. We had a lot to cover, and tomorrow I'll be back with trade ideas. We'll look at what we were in last week and look to see if there's anything else that's on the radar for Monday in the coming week. If you felt like this video was helpful, please share it on social media. And also, if you're not a subscriber, just subscribe. First name and email, and you get access to the Trade Ideas webpage. You get a free PDF I've got for you, and you get notice of when we get new posts that are on the website. So we'll be back with you tomorrow. Have a great weekend, everyone.